The Anti-Money Laundering Regime, Special Recommendation 9. Overview of the report. The Anti-Money Laundering (AML) regime is a collection of standards, norms, and rules set by the Financial Action Task Force (FATF). This framework establishes the legal and operational basis for countering money laundering and terrorist financing. The 2006 Anti-Money Laundering Report by the World Bank provided an assessment of the global AML landscape and identified the key challenges and opportunities to improve the effectiveness of AML measures. The report found that progress had been made in strengthening AML laws and regulations, but more was needed to ensure an effective and comprehensive AML framework. The report highlighted the importance of an effective AML framework in preventing the abuse of the financial system for illicit activities and in tackling the financing of terrorism. It noted the proliferation of AML measures adopted by countries. Still, it argued that these measures needed to be better integrated and complemented by efforts such as improved customer due diligence and increased international cooperation. Discussion. An intergovernmental organization called the Financial Action Task Force was created to tackle risks to the integrity of the global financial system, such as money laundering and the funding of terrorism. It functions as a global forum for creating regulations and standards to counteract these dangers, and various international regulatory bodies make up its membership. The FATF closely collaborates with these regulators to make sure they take the proper steps to accomplish the intended goals. Financial institutions are required to adhere to the FATF's anti-money laundering guidelines, namely Recommendation 9. According to this advice, financial institutions must take further steps to improve the identification of suspicious actions, such as transaction monitoring and client due diligence. Investigating and bringing cases of financial crime to justice is another important role that law enforcement agencies play in the battle against money laundering. To combat tax evasion and illegal financial flows, nations can exchange financial account information using the Common Reporting Standards (CRS), a mechanism that has been universally accepted. The Global Forum on Transparency and Exchange of Information for Tax Purposes, which was established by the OECD and G20 nations, established the criteria on which CRS is based. To deter tax evasion, this system enables participating countries to automatically communicate data on the bank accounts that taxpayers in other participating jurisdictions have. Summary. The fundamental elements in Special Recommendation 9 of the World Bank's AML regime were issued in 2006. Establishing a financial intelligence unit, requiring customer due diligence and record-keeping, reporting suspicious transactions, and international coordination are essential elements. A risk-based approach, national AML strategy, sufficient degree of legislation, thorough AML-CFT system, monitoring and assessment, capacity building, and international collaboration are all emphasized in SR 9.